From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli on another day where we didn't do much today. Well, we did, but the market didn't.
Yeah, I was very busy, thank you very much. Yeah, it's just been one of those watch and wait scenarios. First of all, we have a wary eye clearly still on the Middle East, but also we've got that really big data drop that comes through tomorrow in the United States. We've got jobs data tonight sort of as a precursor, and just, I guess, not a lot of real big risk taking right now.
No, so let's see where the CBO 200 finished or is finishing. A tenth of 1% gain. So I think a little bit of movement coming through in the afternoon trade. You pointed out that Brent has spiked quite a lot. So some of the energy players picking up, of course, as we continue to watch the unrest, I should say, in the Middle East, and real estate stocks looking really good today on this, what were we calling it? Tepid Thursday.
Ah, that's a good one. Also, we have been watching the yen yo-yoing. It looks as if we are cooling our heels in terms of expectations when it comes for interest rate hikes there, and our stock of the day.
Yeah, Pilbara being punished. Now a big block trade worth 270 million going through after the close yesterday, looking like, was it Morgan Stanley and Bank of America shopping around for some buyers at a 4% discount. So we did see that get whacked a bit today.
Yeah, and you know that it's a slow news day when we're talking about a block trade for Pilbara. Look, lots going on underneath the surface though, but yeah, we will continue to stay focused on what's unfolding in terms of the Israel, Lebanese and Iranian conflict that is going on now. We've had an interview just coming out recently saying that the Hezbollah commander who was killed by Israel had agreed to a ceasefire of some sort. Prior to that, of course, those details are coming from Iran. So clearly, with the oil price rising, we're watching the energy names catch a little bit of that upward momentum. I mean, it's always a bit difficult to just boil down a potential war to energy stocks. But look, that's what's happening in markets.
That's what we're focusing on. So let's see what they are doing there, those energy players. I did mention that some of them are looking good. Woodside's been up by about 0.4%. Beach Energy also higher, and Cooper Energy up by about 4%.
Also, we should say that, you know, the US dollar getting a bit of a bid in the safe haven, as people look for safe havens. But Japan has rallied the stock market as the rate risk has eased. Now let's go to the lithium names. Negativity here. So it was an interesting one on the call. I was speaking with Grady Wolf from Bell Potter and my other guest, Sanjeev Narandan from Team Invest, just saying how, this China stimulus story isn't necessarily a boon for the lithium miners in particular. And of course, we had that news from Pilbara, which we'll get to in just a moment.
Yep, and a quick look at the real estate stocks that did very well today. Dexus there up by about 2.7%. Stockland up 1.5%.
So I read this note from Goldman Sachs. I wasn't the only one, but it was all about boxes and burritos was the title, telling investors to sell GYG for KFC operator Collins Food instead. So the analysts there say that it likes the GYG business, but says that it is ordering value over optimistic growth. I thought it was really interesting reading through the note, that the analysts were saying that GYG has an overly ambitious long-term store expansion profile, of which there's no precedent in the Australian market. It always did seem like a lot of stores that they're targeting here locally.
I just have to say, in my limited knowledge and our producers' hunger, pardon the pun, for this company, a lot of people are buying it. And Ange Bishop at Channel 10 today, when I did my cross, telling me about the big Mossman store as well that's garnering a lot of attention.
Really?
They're going to open till 10 p.m.
Ooh, the people of Mossman won't like that very much.
Yeah. Now, meanwhile, Resimac buying Westpac's auto loan portfolio for an expected value of $1.4 to $1.6 billion, says it won't have any material impact on its full year results. Westpac shares a little weaker today.
Yeah, and the ASX has been forced to scrap thousands of dollars worth of trades in takeover target Nimoy Cotton. It failed to publish an updated $150 million takeover offer from bidder Louis Dreyfus before shares were permitted to trade. Egg on their face, no doubt. Bit of news late in the session as well.
Right, Origin Energy, it's going to exit its potential hydrogen development project and cease work on all hydrogen development opportunities. So this is, of course, big news. And we were talking as well about the Pilbara Minerals block trade.
Yeah, Morgan Stanley, Bank of America, you were right, shopping around that block trade after market close yesterday. 270 million shares would be offered at a 4% discount to Wednesday's closing price, perhaps meaning the seller is taking advantage of recent momentum that we have seen in Pilbara shares. Was that enough to convince my guests on the call to buy it? Take a little listen.
So I definitely think there's a case for an upside potential, but at the moment I wouldn't be saying it's going to happen right now because EV sales in China are down, EV sales around the world are down.
Well, we saw that with Tesla.
Yeah, exactly. Yeah. So around the world, people are just refusing to buy EVs. So, and I think the resale value in Tesla is so low that what's the case that you want to buy an EV right now? So I think when you're looking at lithium players, Pilbara is the player to get into. But, and it has been battered down, as you can see on this chart here.
The way we look at it, we want to see something long-term, stable, the business that can keep growing. But all this noise about what's going to happen, where the money's going to be spent, who's spending the money, China stimulus, and then somebody else's stimulus, and then all the short sellers coming into the market, we can ignore all of that and just focus right on the business. Pilbara is not something that we'd spend a lot of time looking at.
Let's get to our guest. Welcome to the COB, Mathan Somasundaram from Deep Data Analytics. Mathan, how do you sort of get excited on days like yesterday and today?
Look, I think the market is in one of those funk modes where it's trying to work out what to do. So you kind of have to understand what's happening with global players as well as the local. So, I mean, there's big moves happening in the large cap area and the global guys are moving around. So everyone's kind of taking a pause today just to see what to do. And I don't think there's any real sentiment. But I think it's interesting to see after a long period of time, the Fed started with a 50 basis point cut. And they said about, they were worried about the employment market. And we've seen JOLTS data coming out of the US. We've seen ADP employment over the last 2 days. Both of them were pretty solid beats. So, what does the Fed know that we don't know? That's the first question. And China has been, holding back for a long time. And they've done a bit of stimulus. It's still pretty small. I mean, we're talking 1 to 2% of GDP. That's not going to turn the semi-trailer. But the reality is they did do something, and they usually do something before their long holiday. So you've got a coordinated move. What do the two big economies know that we don't know? So that's what's spooking the market. So I think we're waiting to see what plays out. And as you guys were talking about, the Middle East is the big uncertainty. I mean, the oil price before that was pricing in recession when the market was pricing in boom. So someone's wrong. So we're waiting to see what happens.
Yeah, I stole a cartoon again, Mathan, from your Sunset Strip report last night. Because, if we see the long drawn out conflict, if we see other countries becoming involved, the US being brought into it as well, we already know that they're selling arms, to Israel in particular. This is inflationary in and of itself, isn't it?
Yeah, nothing is inflationary like war. And this is expanding, and it's all about pushing through the next player. I mean, if Iran gets involved and we get that proxy wars become much more obvious, then the risk is some infrastructure that's going to play out, whether it's ports, whether it's oil refineries, one of the main pipelines. If they get attacked, oil price will pop. And this is a risk that's been in the market for, a good part of 6 to 9 months. And it's, the market has ignored it for a long time. And I think the market's starting to pay attention to it. So I think it's a risk that you knew was coming. And also where the market is assuming with the amount of stimulus and rate cuts, I'm amazed at how low oil has held up. And then that plays out to all types of energy sector. We like uranium, we like coal. All of these sectors have been unloved, and it's probably the only value territory in the market.
What about some value coming back as well into some of the miners on the China stimulus? You've seen a big reaction, particularly yesterday in Hong Kong, a little bit of pullback, or a big pullback, I should say, in property stocks today. But what does it all mean for the miners here?
Yeah, it's a tricky one. I think if you put everyone together, it kind of gets lost because obviously the big boys are all iron ore. So, iron ore demands what happens to the overall sector. But there's large parts of the mining sector doing quite well. I mean, we love gold. Gold's doing really well, has had a pretty good run. If you look at rare earth, Linus is doing really well. Coal is holding up pretty well. Steel prices, if you look at the ETF, despite the weak property prices, steel's held up pretty well. So there are areas of the mining sector that are doing really well. Do I buy into the whole thematic of China, stimulating like everyone's expecting? What's the word? Bazooka. It's 1 to 2%. I mean, if they're going to move it, they need to do a lot more than that. And I would have expected that if they were going to do a lot more, they would have done it before the holiday because, they've already said that they want to boost consumer spending and tech as the growth story. So if that's the case, I would be doing my bazooka before the long holiday. So they didn't do a lot more. They did say they were going to support the property market, which makes sense. I mean, the property prices have been falling for a good 3 to 4 years. So stabilizing all these sectors, bailing out the banks, the fund managers. Again, that's one thing no one expected to come through. They buy equities. So all of these things came through. I think they're more about stabilizing and helping consumer spending rather than going out and rerunning a property bubble. So I'm not getting overly excited, but there are segments of the mining sector that are doing really well. I mean, mining services are doing well, and certain sectors of the mining category are doing really well. So, you got to be selective. I don't think you're going to be going out buying iron ore miners when iron ore bounces from 90 to 105 in a week. So, if you're trying to pick that, it's already happened.
Mathan, when it comes to the smaller end of the market, even the micro cap end of the market, do you have any strong views as we round out this calendar year?
Look, I think the growth story, when you see recovery in growth story, micro caps and small caps, they get hit on the down cycle the most, and they provide you the biggest turnaround. So you got to look at good quality businesses that nobody wants to talk about. I think everyone should have 1 or 2 of those in their portfolio. So you got to pick good quality, global growth play potential micro caps with a decent balance sheet because you don't want to be raising money right now. So with a decent balance sheet, and pick 1 or 2 of them and put a bit of money in it because they're going to be the one in the next 12 months. Everyone will look back in anger and say, "Oh, I should have bought that one." It's easy to say it when things are good. Right now, it's ugly, and micro caps and small caps are underperforming. So I think there is a reason to be in it. But I think you got to be very selective. You got to buy good quality small caps with the balance sheet, with a really good growth play that the market doesn't want to pay for. And there's plenty of those in the market. So we are going shopping, but we're being selective.
Mm-hmm. All right. Well, as Oasis said, don't look back in anger. Mathan, thank you for your time. Mathan Somasundaram from Deep Data Analytics.
Just getting some commentary coming from the Bank of England's Governor, Bailey, saying that the bank could become more activist on rate cuts. So does that mean a 50 basis point cut? He says the Bank of England could move more quickly to cut interest rates if there's further good news on inflation. But here you go, just tying in with what we were just chatting about with Mathan, saying that the conflict in the Middle East could push up oil prices and therefore inflation as well. But yeah, a bit more activist in its approach to cutting rates. Interesting language.
All right, let's get to the market leaders on a flat day. Sigma Health coming back up 7%, and a few other movers as well. We mentioned the REITs were looking really good. Charter Hall up by 3.2% today.
Lifestyle Communities got a broker upgrade coming through from Barrenjoey. Fletcher Building, we saw a change. Well, we saw some buyers moving in. And Light & Wonder, a statement of changes in beneficial ownership. So some buying going on in those couple of companies. On the flip side, let's see what's lagging. New Hope traded ex-dividend today. Star just going from, bad to worse, if we can say that. Pilbara, there's our stock of the day, off by 5%. Someone's wanting to sell a big chunk. ARB is also trading ex-dividend today.
All right, moving to the small end of town, Energy Resources, 25% jump there. LTR Pharma, we did speak we spoke to AFT Pharma, but LTR Pharma came out with an update, I'm pretty sure, today. Anyway, up by 10%, and Echo IQ up by 9%.
You spoke with a couple of good CEOs just there in the last hour or so. Those are up online or will be shortly. Some of the laggards, Biome. Look, it was up a couple of days ago. Appen has had a pretty wild run, so giving back some of that today. Wildcat Resources as well, down by 8.3%.
And having a look as well in terms of what we are seeing tonight. Of course, we talked about the Challenger Jobs Report. Ahead of the big one tomorrow night, the non-farm payrolls. PMIs today from Eurozone, UK and US, also factory orders in the US and the overall jobless claims.
Yeah, the ISM non-manufacturing index in the States, according to Westpac, likely to remain expansionary for September as we continue to see that real consumer resilience in the United States. Locally tomorrow, well, today we did have trade data.
Yes.
Not much on the agenda here locally tomorrow.
No, and it remains, of course, a public holiday in China. Switzerland tomorrow night, unemployment rate, that's looking very far in the future. We'll also have the non-farm payrolls as well.
Yeah, all right. Let's just say goodbye, but before we do so, we'll recap where the local market did close at the end of it all. We saw the COB Australia index up by about, let's call it 0.2%. The S&P ASX 200 up by 0.1%, 8,205.
All right, well, that does it for this tepid Thursday. Hopefully we'll be back for a fun Friday, a frisky Friday.
I like it. We'll see you at 9:45 tomorrow morning.